Take a look at the comeback we're seeing in the regional bank space. A huge chunk of names higher today, and some by significant amounts. NBT Enterprise up double digits, and the S&P Regional Banking ETF is up 20%, actually 23% in just a month. Leslie Picker is here to explain. I mean, this is a big move, Leslie.
It's a really big move, and think about it, Kelly. This was a sector that was all but left for dead just a little more than a year ago with the regional banking turmoil. Interestingly, if you look back to when that presidential debate happened at the end of June, that KRE is outperforming the S&P 500 over that time period by more than 20 percentage points. And a lot of that has to do with the prospect of deregulation among the banking system if President Trump were elected. And all of that has created this spur to rally in the sector. In the current administration, a more active Consumer Financial Protection Bureau, coupled with proposed capital rules and a lack of M&A appetite, have limited the upside in many regional bank stocks, analysts say. But the KRE has also gained more than 4% in the last 2 days since President Biden took himself out of the race, although that may have more to do with earnings than with politics. Regional banks have largely put up stronger than expected numbers, particularly as it pertains to credit quality and net charge-offs. Those two areas have been in focus ever since the Fed began hiking interest rates, and especially after last year's regional bank turmoil. The outlook for net interest income, the profitability metric for loan making, has generally been stronger than expected as deposit trends stabilize. And that's what you're seeing with names like Zions, First Bancorp, and Northwest Bankshares today. And I'd be remiss not to mention that regional banks are also benefiting from just this overall sentiment shift in the market with the broadening out of small and mid-cap names, of which regional banks are among them.
Well, Leslie, I'm no chartist, but if we can put up a 5-year chart of the KRE, right around here, 58, between, close to 60, we're at this level that looks really interesting over time and is right around where the KRE was before the Silicon Valley Bank collapse. And so does that suggest that if you think there's still some turmoil, consolidation, office reckoning to come, that things might have gotten a little rich here?
I mean, the question is basically if you're a regional bank investor and you're kind of participating in this market during a historic interest rate hike, at first, that's actually really good for regional banks because they can charge more on the loans that they make to companies and make to individuals. Then at some point, that kind of changes because you have to pay your depositors more, but it doesn't all happen at the same time. So you get these kind of cycle effects, and then at the same time, higher interest rates also have an impact on the balance sheet, which is what we saw back in March of last year, throughout the spring of last year. And then it starts to trickle into credit quality. So a lot of the pressure that was, that had befallen the KRE had to do with concerns surrounding credit quality. But you haven't really seen major systemic issues with credit quality. And in fact, in a lot of these banks, it's getting better. So that's kind of lifting this cloud that's been existing for a long time of uncertainty.
I thought John was going to say, is it going to be a breakout? I don't know if you were, you were seeing ceiling. I was like, is it a floor? I mean, you know what we have to do? We have to do a technical support segment. Ask our chartists what they think. You're right, though. A very significant level that we've reached. Leslie, thank you very much. Leslie Picker.